Another eventful week for the meme trade. Roaring Kitty revealing his 6.6% stake in Chewy, and Koss stock skyrocketing more than 140% on Wednesday. So what's next for meme stocks, and what does it all mean for retail investors? We're bringing in just the man to talk about this, Tasty Live CEO Tom Sosnoff, for answers. Tom, it is always good to see you. You know, big picture, Tom, in 2021, when I was talking about meme stocks, I don't know if I would have thought, skip ahead, to July 2024, I'd still be talking about Roaring Kitty and Dave Portnoy and meme stocks. I mean, I guess I would have been surprised if you've told me that. Are you surprised, Tom, that this is still a trend, a theme that we're talking about?
Well, obviously, I think I'm in the same camp as you. I would have been, if you had told me 3 years later from 2021, we'd still be talking about this in 2024, I think I would be super surprised. But then again, okay, I'll throw another angle at you. Maybe just the term meme stuck, and it's not just like the GMEs and the Chewys. Was NVIDIA a meme stock? For an institutional meme stock. I'm not sure if that's just the new term that may stick. For anything that's kind of out of control.
So a problem of taxonomy. All right, putting that aside for a second, we were just talking about with our head of news here that we're feeling 2021 vibes. And stick with me, we got these mega caps stocks, heavy concentration favoring just a handful of stocks, and then out of the blue we get this retail explosion in certain names. We saw GameStop and Keith Gill filing at 13G now. That's a game changer too in Chewy. You seeing any similarities here?
Well, of course. I mean, first of all, there's two stories here. The first story is the whole Keith Gill Roaring Kitty thing. It's an extraordinary story for retail investors because somebody did something incredibly different than's ever been done before. And I mean, not too many retail investors turned 50 million into some couple of 100 million. God knows how much money he has, but it's really never been done before. So that in itself is an unbelievable story. But the other side to it, I think, is you bring up a great point. What does this mean? Is this a repeat of 2021? Because if you remember, we normalized in 2022 and it was a pretty dark year for the markets. And I think you are seeing you may be seeing some capitulation, upside capitulation. You may be seeing kind of some euphoria that I don't know if we can we maintain these levels or will we normalize, especially in volatility, especially in all the indexes and everything else. So yeah, I'm going to answer your question and say it's a little like 2021, not as extreme, but a little bit like it.
Tom, I'm just curious, for folks who are listening right now and they're hearing us discussing, Roaring Kitty and the meme stocks and the moves and they want to play it, they want in, Tom, what guidance would you give? Is there any kind of just general guidance, advice, tips and tricks?
Well, at Tasty, we're like the third largest derivatives boutique. So we specialize in options when it comes to stocks like those. Most of our customers and most of our trades are in the option marketplace. And most people that trade things like Chewy and GameStop and things that have, let's call these are pure asymmetrical plays, right? You're just, you want to risk one to make 10 or something like that. And so a lot of people use the option marketplace for that. And I would just be careful in the sense that the markets in there, even though these stocks are very liquid and even though they have a ton of trade, the markets aren't great. They're a little wide, and you have to be careful about, you have to be careful because some of the upside call skew is ridiculous. And if you're not used to upside call skew, it just means that calls are priced more expensive than the puts. And so it's where the velocity of risk is deemed to be. So that's the only thing I would watch out for is just be careful about the upside call skew.
All right, we always appreciate a good risk management discussion. Give you the floor here. Anything else you want to tell investors? Could be about retail stocks, just about anything.
Well, as we wind down for kind of, I'm sure you guys are dealing with the same stuff we're dealing with today. It's just a weird week,
Yes.
When you have a half day on Wednesday and a day off on Thursday. It's kind of, it's a weird breakup. But we haven't. I don't think we've experienced, this kind. It's been a long time since we haven't seen a downtick. I think it's been almost 350 days since we've had a 2% drawdown in the S&Ps. And I think we've gotten to the point where, we're a little frothy. as we like to say, the ducks are quacking. So just be careful.
All right, the ducks are quacking. We're going to leave it on that note. Thank you for the visual and the audio as well. Tom Sosnoff, as always, thank you.
Have a great weekend, guys.
First, let's recap where things stand as of now when it comes to Roaring Kitty, GameStop, and the XRT ETF. The recently announced lawsuit against Keith Gill, aka Roaring Kitty, has been voluntarily dismissed without prejudice by the plaintiff. This is good news, but the fact that the lawsuit was dismissed without prejudice means that the lawsuit could be brought forward again at some point in the future. So in case that happens, let me very briefly explain this lawsuit to you. The complaint is 40 pages long, but let me very briefly summarize and simplify it for you. An individual investor purchased 35 shares of GME stock, yes, 35 shares, and a few options at, quote, artificially inflated prices. The plaintiff accuses Keith of engaging in a pump and dump because he sold and/or exercised his call options and increased his position in GameStop by more than 4 million shares. In my opinion, this is absurd. Keith bought a position with his own money. He shared his thoughts about a company he likes. He posted memes. And by the way, you should read the complaint for this lawsuit if you get the chance, because it is absolutely hilarious to read them discuss each of Keith's memes and try to explain them in detail. Keith did not tell anyone to buy or sell anything. And rather than just taking the cash from selling his options and disappearing, Keith instead used that capital to purchase more shares of GME stock. The options were going to expire worthless if Keith didn't do anything with them. Anyone who has even a basic understanding of options knows this, and it should not have been a surprise to anyone that Keith was going to dispose of his options, whether through selling them or exercising them, before they were to expire worthless on June 21st. So again, I think the accusations made in this lawsuit are immaterial, and it is important to remember that in case they try to bring this lawsuit again at some point in the future. Now let's talk about the XRT Retail ETF. This ETF is especially important considering Keith's recently announced position of over 9 million shares in Chewy stock. Both GameStop and Chewy are held in this ETF. And on June 26th, one day before Keith's dog post, Chewy stock was the most heavily weighted in this ETF. And according to Chart Exchange, the XRT ETF has a short interest of more than 300%. That is ridiculous. You can call it naked short selling, you can call it rehypothecation, you can call it market makers not wanting to pay fees to State Street, who manages the ETF. However you spin the situation, this is just ridiculous, utterly ridiculous. If you see a security that has a short interest of more than 100%, then sirens should be going off in your head because something is criminally wrong. Many people have been wondering if this ETF has been used to hide short exposure to GameStop. Let me briefly explain how this could work. Hypothetically, if you have two ETFs, one with 100 stocks in it and the other ETF with all of those same stocks in it except for one specific stock, then you could short the ETF with all of the stocks in it while simultaneously going long on the ETF with only 99 stocks in it. And you effectively create net short exposure to a specific stock without making it obvious to the public. And if you look back historically, spikes and failures to deliver in the XRT ETF appear to correlate with spikes in GME's share price some days later. I'm looking forward to getting the short interest and FDD data for XRT for the second half of June, but unfortunately we have to wait until the middle of July to get that data. It is absolutely insane that individual investors have to wait weeks just to receive a data point that should be readily available to the public on a daily basis. The SEC cannot honestly claim that it cares about investors receiving proper disclosure about their investments while simultaneously not requiring a daily reporting of short interest and failures to deliver. Now let's briefly cover where things stand as of now when it comes to GameStop. GameStop has roughly $4 billion of cash, solid leadership, and narrowing losses. You may remember not too long ago that GameStop had a job listing for a director of global treasury. And last I checked on GameStop's career website, that job listing was no longer showing. If the position has been filled, then that is very exciting. I think it is very doable for GameStop to invest a portion of the company's $4 billion in cash and then use the profits from said investments to help offset the company's slight losses. If GameStop were to do this, they could very realistically become profitable quarter after quarter. In the immediate term, GameStop is working to reduce costs, focus on profitability, and push forward into the collectibles market. GameStop is offering graded Pokemon and sports cards, unique controllers, and other physical items that are difficult to find at other retailers. I noticed Larry Chang is getting in on the action. Also, great job on the marketing team for putting out a card bounty over on X. Even if they don't get the card that they're seeking, this is still genius marketing. Posts like this send out a clear message to collectors that GameStop is now seriously in the collectibles business. Speaking of the collectibles business, I'm curious to see if GameStop relaunches their NFT marketplace at some point in the future, given that the SEC appears to be taking a much more favorable stance toward Ethereum as of late. Regardless of that, it is clear that GameStop is pushing hard into the collectibles market. Ultimately, I want GameStop to survive, thrive, and reinvent its business model in a meaningful way. I'm tired of companies being targeted and driven into the dirt by malicious short sellers and large firms on Wall Street. Over the past century, many legitimate companies have been targeted, hit with short and distort campaigns, their share price shorted into oblivion, their ability to raise capital destroyed, and ultimately their business forced into bankruptcy due to Wall Street's insatiable greed. The reality is that today there are many problems plaguing the financial markets, and as individual investors, we want this to change. What individual investors want is simple, and nothing we're advocating for is beyond the realm of reason. Individual investors want a free, fair, and transparent stock market. We want large institutions to be held accountable for their actions. We want individual investors to have access to the same real-time data from exchanges' better private feeds, which is currently only available to the large firms on Wall Street. We want short sale data to be reported in real time. We want an end to excessive amounts of failures to deliver, and we want entities who fail to deliver on their obligations to be held accountable. We want an end to payment for order flow due to the insane conflicts of interest it creates. There's a reason why so many other countries have already banned it. We want the exchanges to be not-for-profit utilities as they once were. The exchanges becoming for-profit ventures has created so many conflicts of interest at the expense of individual investors. We want increased competition among market makers. And we want all of individual investors' orders to be routed directly to lit transparent exchanges rather than opaque alternative trading systems known as dark pools. Ultimately, it's simple. What we want is a stock market that offers a truly level playing field for all investors. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.